Preparing for a fund administration at Wells Fargo interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does fund administration mean, and what would your role be in a Wells Fargo fund administration team? Fund administration is the operational backbone that keeps an investment fund accurate, compliant, and investor-ready. I think of it as NAV oversight, fund accounting review, shareholder or investor activity, expense processing, reporting, and control evidence. The administrator does not make portfolio decisions. It ensures transactions are captured correctly, assets are priced, liabilities are accrued, and reports are delivered on time. At a bank like Wells Fargo, accuracy, escalation, and client service matter as much as technical knowledge. While answering, focus on the administrator's role in NAV production, accounting oversight, investor servicing, reporting, controls, and why bank-owned fund services prioritize accuracy, deadlines, escalation, and client confidentiality. Question 2. Walk me through how you would calculate a fund's NAV. NAV is the fund's net asset value per share or unit. I would start with investment positions, apply approved prices, add cash and receivables, subtract payables, accruals, and other liabilities, then divide by shares or units outstanding. The key is not just the formula, it is the control process. I would reconcile positions in cash, review price exceptions, verify corporate actions, and investigate material movements before releasing NAV. Make sure to cover the NAV formula, valuation of investments, cash and receivables, liabilities and accruals, units outstanding, reconciliations, review controls, and how NAV errors affect investors. Question 3. How is fund accounting different from fund administration? Fund accounting records and explains the fund's financial activity. Fund administration is broader. In practice, accounting covers trades, income, expenses, pricing, and NAV entries. Administration also includes investor reporting, financial statement coordination, compliance support, audit requests, board materials, and client communication. In an interview, I would show I understand both the daily production work and the oversight mindset, deliver accurate numbers, document evidence, and escalate issues before they affect clients. In your answer, distinguish daily accounting entries from broader administration deliverables, including reporting, audit support, investor activity, compliance coordination, client communication, and control ownership across the fund lifecycle. Question 4. If you found a trade break between the fund books and the custodian, how would you investigate it? If I find a trade break, I first confirm the source, trade capture, custodian booking, broker confirmation, or timing. Then I compare key fields like quantity, price, settlement date, currency, and security identifier. I would quantify the NAV impact, document the investigation, and contact the relevant party. If the break is material or near a deadline, I escalate early with options, rather than waiting for a perfect answer. Be sure to mention identifying the source of the break, comparing key economics, quantifying NAV impact, documenting evidence, communicating with custodians or brokers, and escalating material unresolved items. Question 5. How would you approach pricing securities for NAV, especially when prices are stale or hard to verify? Pricing is a control-heavy area because small price errors can create NAV errors. Level 1 assets use quoted market prices. Level 2 assets rely on observable inputs, such as broker quotes or evaluated prices. Level 3 assets require more judgment and valuation governance. I would mention price tolerance checks, stale price review, vendor comparison, fair valuation approvals, and documentation. The administrator should challenge exceptions, not simply accept a feed. While answering, focus on pricing sources, fair value levels, stale price and tolerance checks, broker quotes, valuation committee involvement, and why independent price validation is central to NAV accuracy. Question 6. What are corporate actions, and how can they impact fund accounting and NAV? Corporate actions change the economic position of the fund, so they must be captured completely and timely. A cash dividend creates income and receivable activity. A stock split changes quantity and cost presentation. A merger may require new security setup and realized gain or loss analysis. I would verify the event against custodian records and market data, review entitlement calculations, and check that the NAV, income allocation, and reporting reflect the event. Make sure to cover dividends, splits, mergers, spin-offs, mandatory versus voluntary actions, entitlement calculations, custody confirmation, accounting entries, and how missed events can distort positions, income, and NAV. Question 7. How are management fees and fund expenses accrued in a fund administration process? Expense accruals make the NAV reflect liabilities as they are earned, not just when invoices are paid. For management fees, I would apply the fee schedule to the correct asset base, day count, and period, then compare the accrual to prior periods and budget. I would also review caps, waivers, class-specific expenses, and approval evidence. Incorrect accruals can shift value between investors or share classes materially. In your answer, talk about accrual accounting, management fee schedules, expense caps and waivers, class-level expenses, reasonableness checks, invoice true-ups, and the investor fairness impact of errors. Question 8. What controls would you apply around subscriptions and redemptions? Investor activity affects both cash and ownership, so timing and cutoffs are critical. For subscriptions, I would confirm approved investor documentation, receipt of cash, share or unit issuance, and anti-money laundering status where applicable. For redemptions, I would check notice periods, gates, fees, NAV used, and payment instructions. The key risk is giving an investor the wrong economic entitlement, which can dilute or disadvantage other investors. Be sure to mention subscription and redemption cutoffs, cash receipt or payment, investor eligibility, share or unit calculations, gates, fees, AML documents, and preventing dilution between investors. Question 9. What fund financial statements or reporting packages might a fund administrator help prepare? Financial statements translate daily accounting into investor and regulatory reporting. I would expect the administrator to support the schedule of investments, statement of assets and liabilities, operations, changes in net assets, cash flows where required, and footnotes. The work involves tying statements to the trial balance, confirming disclosures, supporting auditors, and clearing comments. Strong fund administrators know the numbers and can explain the story behind period-over-period movements. While answering, focus on the link between trial balance and financial statements, schedule of investments, footnotes, audit support, disclosure accuracy, variance explanation, and timely delivery to clients or investors. Question 10. What controls would you use to prevent or detect a NAV error? Controls should prevent, detect, and correct NAV errors. I would use maker-checker review, cash and position reconciliations, price tolerance reports, expense reasonableness checks, corporate action review, and material movement analysis. If an error still occurs, I would quantify affected NAVs, identify impacted investors, document root cause, notify stakeholders, and follow the client's error correction policy. Wells Fargo would value disciplined escalation and evidence retention standards. Make sure to cover preventive and detective controls, maker-checker review, reconciliations, price checks, materiality thresholds, error correction policy, root cause analysis, client notification, and Wells Fargo's risk culture. Question 11. What accounting concepts are most important for investment funds under U.S. Generally Accepted Accounting Principles? Under U.S. Generally Accepted Accounting Principles, investment funds generally measure investments at fair value, recognize realized and unrealized gains, and present investor capital or net assets based on fund structure. International Financial Reporting Standards is similar in fair value focus, but classification, presentation, and disclosure can differ. In a Wells Fargo fund administration role, I would not guess accounting treatment. I would refer to the fund documents, accounting policy, auditor guidance, and established procedures before booking unusual items. In your answer, mention fair value accounting, realized and unrealized gains, financial statement presentation, disclosure differences, fund documents, auditor consultation, and avoiding unsupported accounting judgments. Question 12. For a private fund, How would you explain a distribution waterfall? A waterfall determines how cash proceeds are allocated between investors and the manager. I would read the limited partnership agreement first because terms vary. Typically, capital is returned, then preferred return may be paid, then catch-up and carried interest are calculated. The administrator's job is to model the formula accurately, track prior distributions, review clawback exposure, and maintain support because small errors can materially affect economics. Be sure to cover limited partnership agreement terms, return of capital, preferred return, catch-up, carried interest, prior distributions, clawbacks, and why administrators must model economics precisely. Question 13. How would you perform a cash reconciliation for a fund? Cash reconciliation compares the fund's book cash to bank or custodian records. I would start by matching opening balance, activity, and ending balance. Then isolate reconciling items such as pending trades, dividends, fees, wires, FX settlements, or bank charges. Aging matters because old breaks signal control risk. I would document explanations, assign owners, follow up daily, and escalate material or unresolved cash differences before NAV sign-off. While answering, focus on book versus bank or custodian cash, matching activity, common reconciling items, aging, ownership of breaks, documentation, escalation, and NAV sign-off implications. Question 14. How does foreign currency affect fund accounting? FX affects valuation, realized gains, income, and cash settlement. If a fund holds euro securities but reports in US dollars, I would translate market value using the approved exchange rate at valuation time. Trades may create realized FX when settlement differs from trade date. I would reconcile local and base currency cash, review stale or missing rates, and ensure hedges are valued consistently with the underlying exposure. Make sure to cover base versus local currency, approved FX rates, trade date and settlement date effects, realized and unrealized FX, hedging, cash reconciliation, and pricing consistency. Question 15. What would your month-end close checklist look like for a fund administration client? Month-end close is about completeness, accuracy, and explanation. I would prioritize trade capture, income accruals, expense accruals, cash and position reconciliations, pricing review, investor activity, and trial balance tie-outs. Then I would analyze material profit and loss and balance sheet movements against expectations. A strong close process uses checklists, deadlines, reviewer sign-offs, and clear escalation so reporting is not rushed at the end under client pressure later. In your answer, talk about close checklists, trade capture, accruals, reconciliations, pricing review, trial balance tie-ups, variance analysis, reviewer sign-offs, deadlines, and escalation of blockers. Question 16. A late price or late trade comes in after the NAV deadline. What do you do? If a late price or trade comes in after the NAV deadline, I would not automatically reprocess. I would assess materiality, reason for lateness, client policy, fund documents, and investor impact. Then I would notify the supervisor and client contact with the quantified effect and recommendation. The key is controlled decision-making. Protect NAV integrity, meet deadlines, and avoid informal adjustments without approval and documented evidence. Be sure to mention materiality, client policy, fund documents, investor impact, communication before deadlines, supervisor approval, documented evidence, avoiding unauthorized NAV changes, and what to do when late information appears. Question 17. How do performance fees or incentive allocations work in hedge fund administration? Performance fees compensate the manager for returns above an agreed hurdle or benchmark. In hedge funds, I would look for high watermarks, crystallization frequency, equalization, loss carry forward, and class-level terms. The calculation must align with the offering memorandum, not a generic template. I would test sample investors, compare to prior periods, and review whether fees are accrued in the NAV before final investor statements are issued. While answering, focus on high watermarks, hurdles, crystallization, equalization, offering memorandum terms, investor-level calculations, NAV accruals, loss carry-forwards, review evidence, and controls around manager compensation. Question 18. What regulatory or control considerations are relevant in fund administration? Fund administrators operate inside a regulatory and control environment, even if they are not the investment advisor. For registered funds, SEC rules, the Investment Company Act, board reporting, and pricing policies are relevant. For private funds, offering documents, AML, FATCA, CRS, and investor reporting obligations matter. I would also mention SOC 1 controls, audit support, data confidentiality, and the importance of following documented procedures at Wells Fargo. Make sure to cover SEC or private fund obligations, AML, FATCA, CRS, SOC 1 controls, audit requests, data confidentiality, documented procedures, and the administrator's compliance support role. Question 19. Tell me about a time you worked under a tight deadline. How would that translate to NAV or reporting deadlines? In fund administration, deadlines are real because NAVs, investor statements, and client reports depend on them. I manage pressure by prioritizing high-risk items first, using checklists, communicating status early, and escalating blockers with facts. If I make a mistake, I own it, quantify the impact, and help fix the process. Wells Fargo interviewers will listen for accountability, teamwork, and a risk-aware approach, not just speed. In your answer, show how you prioritize under NAV deadlines, communicate status, escalate issues, maintain accuracy, own mistakes, support teammates, and align with Wells Fargo's control-focused culture. Question 20. Why do you want to work in fund administration at Wells Fargo? I would position Wells Fargo as a strong platform because fund administration requires scale, controls, technology, and client trust. I'm interested in the role because it combines accounting discipline with daily problem solving and service to asset managers. I would emphasize that I like recurring deadlines, reconciliations, and detail-oriented review. My goal is to become someone clients and internal teams trust when NAV, reporting, or audit issues need a precise answer. Be sure to connect Wells Fargo's scale, risk discipline, client service, and controls to your interest in fund administration, accounting accuracy, reconciliations, reporting, and long-term operations career growth. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.